Hello and welcome to our presentation. Today we hope to explain an analysis we have performed that has revealed a potential investment opportunity. We believe an opportunity exists regarding Foot Locker stock. Before making any investment decision, we believe it is important that you understand the basic operations of the company being considered. To support your understanding, we have compiled the following details from the company's most recent 10-K filing. Foot Locker Retail Incorporated is an American sportswear and footwear retailer with its headquarters in Midtown Manhattan, New York City. Foot Locker operates in 28 countries worldwide and is usually found within malls under the brands of Foot Locker, Kids Foot Locker, and Lady Foot Locker. In addition to operating over 13 million square feet of retail store space, Foot Locker also participates in e-commerce sales of footwear. Foot Locker faces a few industry-specific challenges that should be considered. First, it should be noted that the sportswear industry faces heavy competition. Foot Locker is competing with major shoe outlets such as Nike and Adidas, which are both two well-known and trusted brands that both operate their own sales outlets as well as sell their products to sellers that compete with Foot Locker. Shoe sales are greatly impacted by fashion trends, and this is important because these trends can cause swings in the sales levels from period to period. Finally, similar to trends, the sportswear industry is greatly impacted by product innovation, and therefore falling behind could cause Foot Locker to lose to its competition. Alright, now that we have a fair understanding of who Foot Locker is and the challenges it faces, let's get to the point. We believe that you should short sell Foot Locker due to a current overvaluation of its current stock price. As of our analysis, Foot Locker is trading around the $43 mark. Our own calculations lead us to believe that the true value of this stock is somewhere within the range of $32 to $36. Under this idea, this would mean that there is an opportunity to gain a 16 to 25% return on investment by short selling. This is before any basis point fees, of course. To come to this conclusion, we had to make some very important assumptions. First, we calculated a beta of 1.11 by using 4 years of monthly data and comparing this data to the S&P 500. Next, we calculated Foot Locker's cost of debt and cost of equity by taking into consideration the effects of a tax shield from debt due in 2022 at an 8.5% rate. More information on this calculation is provided within our supplementary materials. These figures were used to arrive at our weighted average cost of capital. The final important assumption that was made was that of the applicable tax rate of Foot Locker. In the most recent 10-K, management predicts that they will be impacted by a 27.5% tax rate for the 2019 fiscal year. The past 4 years, applicable tax rates of Foot Locker have ranged from 34% in 2016 to 25% in 2018, and with the upcoming presidential election, we felt that it was fair to round this figure to 30%. Before we conclude, we would like to note the possible impact on our conclusions if our assumptions are incorrect. If our assumptions and analysis were to deviate from reality, either due to error or unexpected market trends, then our recommendations could be altered. There is a risk that our stated beta is too high due to our decision to consider using 4 years of data. If in reality our beta had been lower than our determination, then this would result in a decrease in our cost of equity calculation. This decrease in cost of equity would then impact our analysis further by decreasing our weighted average cost of capital valuation. This decrease in weighted average cost of capital would be reflected as a decrease in discount rate on our summary tab, and this would drive up our intrinsic value calculation, which is the basis of our suggestion to short sell Foot Locker stock. We thank you for your time, and we hope that you have found this presentation as a useful basis to make an educated investment decision.